Friends, gather round. Tonight we're diving into the thrilling world of accounting. Don't worry, it's more exciting than it sounds. We're talking about taxes, loopholes, and a revolutionary equation that's about to shake things up. Meet Dr. Joko Ismuhadi Suarsono, an Indonesian accounting genius who's challenging the status quo. Dr. Joko, bless his calculator-wielding heart, saw a problem. The way we calculate taxes is, frankly, a bit of a mess. Companies were playing fast and loose with their finances, and governments weren't collecting what they were owed. Something had to change. Enter the tax accounting equation, TAE, Dr. Joko's masterpiece. This isn't just some dusty formula, it's a powerful tool that could reshape how we think about taxes and corporate responsibility. Buckle up, folks, it's about to get numerical. Before we get to the TAE, let's rewind. Remember the basic accounting equation? No? Well, it's kind of a big deal. It's the bedrock of accounting, and it looks like this: assets equals liabilities plus equity. In plain English, this means everything a company owns, assets, equals what it owes to others, liabilities, plus what's left over for the owners, equity. Simple, right? This equation has been around for ages, but it has its limitations, especially when it comes to taxes. See, traditional accounting focuses on profit and loss. But what about a company's overall financial capacity? What about those sneaky ways they try to minimize their tax burden? That's where the TAE comes in, like a financial superhero here to save the day. Now, the TAE might look a bit intimidating at first glance, but bear with me. It goes like this. Delta NW equals NP plus delta A minus delta L minus C. Don't panic. Let's break it down. Delta NW is the change in net worth, NP is net profit, delta A is the change in assets, delta L is the change in liabilities, and C is consumption. In essence, the TAE says that a company's change in net worth isn't just about profit. It's also about how they manage their assets, liabilities, and even their spending habits. This is revolutionary, folks. It means we can no longer just look at a company's profit margin and call it a day. We need to consider the whole picture, their assets, their debts, and yes, even how much the CEO is spending on solid gold paper clips. So, how does the TAE actually work? It all comes down to net worth. Think of net worth as a company's financial report card. A high net worth means they're doing well, managing their money responsibly, and contributing their fair share in taxes. A low net worth, well, that's a different story. The TAE shows us that a company can have a healthy profit but still have a shrinking net worth. How? By taking on more debt, increasing liabilities, or selling off assets. They might look profitable on paper, but in reality they're bleeding money. This is where things get interesting for tax purposes. By linking profit to net worth, the TAE gives us a much clearer picture of a company's true financial capacity. No more hiding behind accounting tricks. The TAE exposes it all. Section 5. The zero dividend dilemma. Joko's got you covered. Now let's talk about dividends. You know, those lovely little payments companies give to shareholders when they're feeling generous? Well, some companies aren't so generous. They report zero retained earnings and distribute no dividends, even if they're raking in the dough. This is a classic tax dodge. By not distributing dividends, companies can artificially lower their tax burden. But the TAE sees right through this. Remember that C for consumption in the equation. That includes any personal spending by the company's owners that's funded by the business. So, even if a company isn't paying dividends, the TAE can track where their money is going. If the CEO is living large while the company claims poverty, the TAE will sniff it out. Joko 1, tax dodgers 0. Section 6, closing loopholes. How the TAE saves the day. Now let's talk about the law specifically. Article 4, paragraph 1 of the Indonesian Income Tax Law, also known as UUPP. This is the part of the law that defines taxable income. The problem is, it's outdated and full of holes. Companies exploit these loopholes to minimize their tax bills, costing governments billions in lost revenue. The TAE could change all that. By incorporating the reduction of liabilities into the revenue formula, the TAE closes many of these loopholes. Remember how companies were taking on more debt to lower their net worth? Well, the TAE factors that in, making it much harder to game the system. With the TAE in place, tax laws become more robust, fairer, and much harder to manipulate. It's a win-win for governments and honest taxpayers everywhere. Section 7, real-world impact. Joko in action. Okay, enough theory. Let's see the TAE in action. Imagine a company that builds luxury condos. They report a modest profit, but their net worth is through the roof. How? They've been selling those condos at exorbitant prices, inflating their assets, and you guessed it, their net worth. Under the traditional system, they might get away with paying a relatively small amount of tax, but the TAE sees right through their scheme. The TAE recognizes the huge increase in net worth and ensures they pay their fair share. Another example, a mining company that's been depleting natural resources. Their profit margin might look healthy, but their environmental impact is devastating. The TAE factors in the depletion of those resources, which affects their overall net worth. The result? They pay more in taxes, reflecting the true cost of their business. It's not just about profit anymore, it's about accountability. Section 8, the future of tax Joko's legacy. Dr. Joko's work is more than just an accounting equation, it's a call to action. It's a challenge to rethink how we approach taxation in a world where companies are becoming increasingly adept at playing the system. The TAE has the potential to revolutionize tax law, making it fairer, more efficient, and more in line with the principles of economic justice. It's a powerful tool that can help governments collect what they're owed and ensure that everyone contributes their fair share. Of course, implementing the TAE won't be easy. There will be resistance from those who benefit from the current system. But the potential rewards in terms of increased revenue, greater fairness, and a more sustainable future are simply too great to ignore. Section 9, a final word. Joko for the win. So, there you have it, folks. The tax accounting equation, complex, revolutionary, and potentially world-changing. Dr. Joko Ismuhadis Sewarsono might not be a household name yet, but his work has the potential to impact all of us. The TAE is a reminder that in the world of finance, things aren't always as they appear. It's time to look beyond the balance sheet and consider the bigger picture, the impact of business practices on society, the environment, and the very fabric of our economy. Dr. Joko, we salute you. Keep fighting the good fight, one equation at a time.